Welcome to GP Bullhound's Tech Thoughts, a weekly overview of economic developments in international markets. Today's the 1st of July, and we are here with Inge Heydorn and Nejla-Selma for our weekly market roundup. Over to Inge.
A quick market update. We have now been through two quite interesting weeks. As you probably already know, end of quarter volatility is quite high, and especially in the end of the June quarter, because you have a lot of rebalancing of portfolios because of performance, but you also have a lot of rebalancing due to index changing that are happening in the end of the half year. So volatility has been high. News flow wise has been quite quiet, except by the end of this week. So let's get into the news flow and how that can affect us going forward. If we start with Micron results from yesterday, quarter bang in line, guidance weaker than expected. But that's a little bit of the normal case when it comes to memory. It's really about adjusting inventories very, very quickly in a commodity market. And that's really normal. But if you break it down then and see, okay, what's underneath the headlines. If we start with the real negatives, they're now downgrading the PC market estimates. So they normally before said 0% growth this year, and now saying -10, although they're keeping up the ASP. So which means that it's a lower end of the PC market that is weak. On the smartphone side, they're saying -5, and they already guided down that the last quarter, but initially in the beginning of this year, they were at +5. So those two parts of the market are the most effective on the negative side, and that's also where we have the biggest corrections in inventory. On the positive side, the demand for data center memories continue to be strong, expected to continue to be strong in Q3 and Q4. But even in that segment, we have a little of digestion of inventory in the short run affecting the market. Graphic looks healthy, which is good for NVIDIA and AMD. And on the automotive side, strength continues due to the fact that we're still in an early phase of upgrading our cars from combustion to electrical vehicles, which has much, much more data handling in the cars than the historic ones. So the read-through is really that we continue to have weakness on the PC side. We expect that to continue at least into 2023. And then we probably have some stabilization, but we could also have some pressure on ASP then. On the smartphone side, we're expecting Xiaomi, which is very important in China, to release a new phone here and in the beginning of July. And we have the new Apple phone coming in September. That will depend. They will drive the market very, very importantly. But the question mark is, will the new Apple phone be something new that really will drive the market? We are a little bit worried about that, and we continue to have a quite cautious view on the smartphone market. So if we end up with -5 to 7 this year, we probably have a flattish market in the first half of next year also. That's our view. Going over to consumer side, the consumer continues to weaken, but that's exactly what the federal banks want. So that's not really a big surprise given that they're increasing the interest rates and the speeds they are doing. But what really stood out this week was the RH profit warning, which is high-end furniture in the US. So it's not just the mid-market that's trading down to low end and the low end cutting back. It's also the richest part of the population with the highest incomes that are cutting back. And that is not that normal in this type of setbacks in the marketplace. But as we have interest rates trading up as much as we are a little bit different scenario compared to normal downturns. And that's really affecting the high end of the marketplace also. Going over to gaming and Nejla.
Thank you, Inge. Yes, let's do a gaming update. Gaming is continuing to stay cold, and the macro conditions are really taking new turns on us. This week, App11 has laid off over 300 workers, and that's roughly 12% of its workforce. Unity also announced that they eliminated 4% of their staff, adding to a procession of job cuts in the tech industry. They both state that this is due to the market conditions, and we can see how this is taking a hit on mobile gaming, as of course with the reduced revenue from ads marketing, this will have a big effect on the total revenue from the mobile gaming. And during the period from January to May 2022, the global mobile game market's total revenue was $34.8 billion, which shows a year-on-year decline for the first time since the COVID pandemic. The growth rate of mobile game downloads in Europe and the United States slowed down during the same period. So mobile gaming are really having a hard time, and probably will continue for a while now with the market conditions, I would say. This is all for today. Thank you and see you next week. Bye.